In today's tech-driven world, Apple stands as a titan. With its sleek devices, innovative ecosystems, and unparalleled brand loyalty, Apple has woven itself into the fabric of daily life. But beneath its shiny exterior lies a deeper question. Is Apple's power in the US too dangerous? Apple wasn't always the giant it is today. Founded in 1976 by Steve Jobs, Steve Wozniak, and Ronald Wayne, the company initially focused on personal computers. It wasn't until the early 2000s, with the release of the iPod and iPhone, that Apple truly began to dominate the tech landscape. Today, it's not just a tech company, it's a cultural force. From the phones we carry to the laptops we work on, Apple has infiltrated nearly every aspect of modern life. But how did Apple rise to such dominance? A combination of innovative products, meticulous design, and a fiercely loyal customer base propelled the company forward. The iPhone, in particular, transformed the smartphone industry, setting the standard for what a mobile device could and should be. With the App Store, Apple also created a vast ecosystem that developers and users alike became dependent on, further consolidating its power. Apple's influence stretches far beyond technology. It has become a cornerstone of the US economy. As of 2024, Apple is worth over $3 trillion, making it the most valuable company in the world. Its revenues are staggering, and its success has created jobs across industries, from retail to software development. Apple's supply chain, while global, is deeply intertwined with the US economy, and the company's financial health impacts stock markets and investors worldwide. But with such power comes potential problems. Apple's dominance over the US tech market has raised concerns about monopolistic behavior. The App Store, for example, has been criticized for its high fees and strict regulations on developers, leading some to argue that Apple stifles competition. Additionally, Apple's tax strategies have come under fire, with the company using loopholes to avoid paying billions in US taxes. For a company of its size, this has serious implications for how much it contributes back to the economy it profits from. Apple's influence isn't confined to the US, it's a global player. The company manufactures many of its products in China, and this dependency has become a point of contention, especially in light of US-China tensions. With such a large portion of Apple's production reliant on foreign countries, its global supply chain can be vulnerable to political instability and trade disruptions. This dependency is a double-edged sword. It allows Apple to produce products at a scale unmatched by competitors but also leaves the company, and by extension, the US economy, exposed to global risks. Moreover, Apple's pricing power is enormous. The company dictates the cost of components and has the leverage to demand exclusive deals from suppliers. This gives Apple an unfair advantage over smaller competitors, reinforcing its dominant position in the market. Beyond the economic and technological spheres, Apple wields substantial political influence. The company spends millions of dollars on lobbying each year, shaping policies related to privacy, antitrust, and trade. Apple's CEO, Tim Cook, has become a prominent figure in Washington, frequently meeting with lawmakers and even testifying before Congress. This cozy relationship between Apple and the US government raises concerns about how much influence one company should have over public policy. Take, for example, Apple's stance on user privacy. While the company has positioned itself as a champion of privacy, its policies are not without controversy. Apple's refusal to unlock iPhones for law enforcement in criminal investigations has sparked debates about whether its commitment to privacy is more about protecting its brand than its customers. As Apple continues to grow, so too do the concerns surrounding its dominance. The company is now venturing into new territories, such as augmented reality, healthcare, and even the automotive industry. With each new venture, Apple's reach expands, and so does its influence over consumers' lives. But at what cost? Apple's dominance has already reshaped industries, and its future endeavors could further entrench its position. If Apple continues to monopolize new markets, the implications for competition and consumer choice could be profound. In healthcare, for example, Apple is poised to gather vast amounts of data on users, raising questions about privacy and corporate control. In conclusion, is Apple's domination dangerous? Apple's impact on the US and the world is undeniable. It has revolutionized technology, created millions of jobs, and reshaped industries. But its power also comes with risks. The company's dominance over the US economy, its global supply chain dependencies, and its political influence raise important questions about the role of corporations in society. Is Apple's domination dangerous? It depends on how the company wields its power moving forward. If unchecked, Apple could become even more monopolistic, stifling competition and innovation. On the other hand, its continued success could lead to further advancements in technology and improved consumer experiences. One thing is clear: Apple's influence is not going anywhere, and as it continues to grow, so too will the debates surrounding its place in the world.